Welcome to another episode of Fresh and Invested. If you're new to this channel, I'm your host, Greg Reeves. If you're returning, welcome back. So today I want to talk to you guys about how much money you need to start investing. A lot of us want to start investing, but we have this connotation that we need a certain amount of money to start becoming investors. So today we're going to talk about some tips that I would give you to figure out how much money are you willing to put into investing. Before we get into this video, please make sure you like and subscribe to the channel and check out my other content. Now let's get into it. Most of us want to start investing, but we don't know how much we are willing to see disappear. I don't know why I did that long drag at the end, but the first thing you want to do is to figure out how much you're willing to lose. Now, I know that sounds scary because when you're investing, you're supposed to be making money, right? Why are we talking about losing money? Well, we have to be realistic. Investing into a company is really what it is, investing into a company, and not a lot of companies succeed. And that's just, a lot of companies can't keep up with the trend, and the world is just constantly changing, and those companies also have to constantly change. So the best thing you want to do is make sure that you're putting your money into quality companies. And now I'll have a video later on showing you how to figure out what companies you should invest in. We have to understand that investing is a patient game. You're not going to be a millionaire overnight. And now some people are lucky to have that happen to them. But most of those times it can be just a variety of things, but that's just not how investing works. Now, there are opportunities to make money. You just have to play your cards right. And playing your cards right just might be knowing technicals, keeping up with news, information, any of those type of things can make you money. You want to make sure that when you invest money, you create a budget. So the best thing you should do is to create a budget. Creating a budget will allow you to figure out how much money can you afford to put into investing. Do not just start putting in a certain amount or random amounts, because you need to make sure that you're disciplined and consistent on how much money that you're saying, I am willing to see go to zero if it happens. Now, we're not trying to have that happen, but that should be your mentality. So if that's even $50 a day, $50 a week, $50 a month, and maybe you want to even do $50 a year, and however you want to split that up, you can do that. Investing is everybody's own individual thing. You can't keep up with everybody. You have to keep up with yourself. But overall, investing does show gains throughout the year. Now we're going to take a look into 3 companies, and honestly, these are banger companies. There's Apple, Microsoft, and Google. And I'm going to just show you possible scenarios of if you invested in a certain year or a certain time period, how much money would you have made, so you can know, maybe it's time for me to start getting into the market or coming up with a plan. So let's take a look. All right, let's take a look at Google. So and we're gonna just look at the year, something close, we're in 2023. So let's look at maybe 2 years ago. So let's look at 2021. Yeah. So let's say you wanted to invest into Google, and on January 22nd, it was $94 in 2021. And currently right now we see it's at 101. but that's just from multiple different other things, such as stock splits, as well as, being what is an investor is however you want to play. Eventually, this is going to, surpass this price. However, if you wanted to, hold it for a year and then take out, if that's your strategy, investing is also a strategy. Sometimes you just don't leave your money into companies for a long time. It's just like, okay, maybe they are, doing well at this time period, and you can see them doing well at like from 5 years from now. But if that company is not willing to adapt and switch strategies, because again, the world is always moving, we can see that stock price coming down and you can potentially lose money. So we want to avoid that. Let's look at, sorry, I actually forgot where I was. All right, so $94, January 22nd, 2021. And let's see if we held it for at least a year. If we held it at least a year on January 21st, 2022, it was 130. So if we do the math, 130 minus 94 is a $36. It's a profit. Now it all depends on how much shares you had. So let's say he was just like, okay, I'm just gonna buy 4 shares. So 4 shares at 94 would have cost you $376. And it was a $36 profit times 4. You would have made $144 in a year. And it just all depends on how many shares you had. Now you could have gotten it from cheaper, depending if you were an early investor, or for whatever price. But you can see that if you held it and you had your New Year's resolution of, I want to start investing, and you held it for a year, you would have made money. Let's look at Microsoft. All right, ticker symbol Microsoft. I don't know why it didn't change. All right, let's look at Microsoft, and we'll look at the 5-year chart. And let's give this example. All right, so here is another example, and I understand why Microsoft right now in 2020, March 27th, which was yesterday, that was my birthday. So I understand why it's at 150. COVID hit, stocks came down, people panicked, feared, but here we have Microsoft at 150. Microsoft is a banger company, and honestly, it's in my investing portfolio. So 150, March 27th. Let's see if we held it for a year, where we would be in 2021. In March, it was up 200. Well, it was at 236. So from 150 to 36 minus 150, that's an $86 gain. And just depending on how many shares, let's say I bought 550. Why is it doing this clear? 150 times 5. So I spent $750, and it was a $86 gain times 5. I would make $430 holding it for a year. And that's just money that I had holding it. And I still have my original investment of $750, but now I have an extra $430. And lastly, I'll show you another company, Apple. We all have Apple products, Apple Watch, Apple phone, Apple TV, just all different types of Apple products. So let's see if we got into Apple. And we'll do it a little bit earlier. So let's say you wanted to start investing on January 11th, 2019. And Apple was around $38. You would have got Apple for a good price. So from $38 to next January, you can see that, it went up about $70. And then from the next January, from there, it went up another, basically what, another $50? About near $50, 60, around there. So step increasing. You basically understand what I'm saying. The amount of shares just depends on your profit. But if you invest in great companies, you will make money always. Not always, but you will make money most of the time. And that's what my job is here. Job is to help you guys be better investors, and wealth, the road to financial freedom and wealth starts here. So thank you guys for tuning into my video. Tune in for the next time, where I'm going to talk to you guys about how to find stocks to invest in. I love y'all, and y'all take care.